Thanks very much, Jeremy, and thank you all for the opportunity to speak at this event. So I'm Claire Sunderland Hay. I'm the first head of the first FinTech Accelerator at the Bank of England, and today I'd like to speak to you all about how we see the importance of innovation, the work that the Bank of England is doing and undertaking through its accelerator, and the benefits that we see this providing to us. So my personal view is that innovation handled well can offer all organisations great benefits. And I'm sure it will surprise none of you to hear that I'm in favour of the approach that the Bank of England is taking. However, to realise the benefits from work on innovative tools, it's really important, in my view, to integrate the work from on those tools into the work of the business as a whole. I think innovation is fundamental to development. It's what keeps us moving forward. It's what keeps our industries developing. Without it, we'd still be using landlines, we'd still be carrying cheques instead of debit cards or credit cards, and there would be no mobile banking. And as one of the increasingly small number of people who can remember a world pre-Google, I think innovation has and I can see that innovation has this amazing ability to reshape our world fundamentally and to change completely how we think about things. I mean, how many of us now remember facts instead of just Googling something? I know that it makes pub quizzes way harder from my perspective. And I think recently, in financial services, it can seem that that pace of change is moving more and more rapidly, particularly driven by this technological change. And that's certainly how it seems to be portrayed. However, I think it's important to note that financial services, as an industry, has traditionally been a driver of innovation. Indeed, there's some evidence to show that cuneiform, one of the first ever written languages, evolved from a method used to make financial records some 5,000 years ago. And some of those things that we take for granted nowadays, like the ability to make overseas payments, evolved from innovations pioneered in financial services hundreds of years ago. More recently, technology has facilitated many changes in the financial sector. We've seen in the past 50 years the invention of the ATM in the 1960s, the rise in online and mobile banking, and even the use of mobile airtime to pay for insurance in developing markets. Now, greater computational power and democratization of access to these resources are enabling further development and innovation outside of the traditional model. These have already touched many aspects of the financial sector, helping to make transaction chains shorter, work processes more efficient, and institutions more operationally resilient. As a central banker, however, I do feel right now I should probably strike a note of caution and highlight that innovation isn't always positive. Synthetic CDO portfolios come to mind. But why do we care at the bank about innovation? What role does the bank have? Aside from the larger impacts, including the potential for shifts in productivity and growth, the changes that will result from these seismic movements will affect central banks as much as commercial banks, albeit in some different ways. We see FinTech as having the potential to affect every aspect of the bank's core responsibilities, how we operate as an institution, as well as areas such as the transmission of monetary policy, the safety and soundness of the firms that we regulate, and the resilience of the system, the financial system as a whole. So you might well rightly ask, firstly, why, and secondly, how is the bank engaging with new firms and FinTech? Well, first of all, on the why. We recognise that it's likely that only some FinTech developments will stand the test of time. Innovation offers great potential for change, but it's not always possible in the moment to see past the hype for the innovations that will truly last. So, for example, one of the things that I think about in this instance where firms are really busy developing products focusing on what at the time seemed this truly innovative mini-disc technology, whilst at the same time, just before the iPod came out and kind of rapidly made mini-disc obsolete. However, despite that risk, we consider broader and early stage development and engagement will enable us to learn more about innovation and the market and bring those lessons to us and our organisation as a whole. And then secondly, on the how. The Bank of England is looking at opportunities presented by this latest wave of innovations in a number of areas. So, firstly, in the Accelerator, which is my own special subject, how we look to authorise new banks, how it might impact on the real-time gross settlement system that we operate, and research into the implications of digital currencies. As an organisation, we intend to explore some of the specific developments to understand more about their potential to assist us in our functions and how they could affect the stability of the system as a whole by engaging directly with startups and innovative technology. So in June of this year, the Governor launched the bank's own Accelerator, which I head up, to lead on the direct engagement with technological innovation and to harness its benefits for central banking across all of our functions. We work in partnership with FinTech firms on challenges that we as a central bank uniquely face. The Accelerator started its work, as announced in June, with 3 proof of concepts. Firstly, we've seen that distributed ledger technology is being explored in a number of areas across the private sector. When applied to central banking, these technologies could offer greater systemic resilience. So we've undertaken 1 proof of concept to look at this area. A small team built a scalable distributed ledger environment. The environment contains several smart contracts to illustrate the applications of the technology, and the technology, whilst clearly exciting, could have real benefits if it enabled greater resilience by removing single points of failure. However, our work also highlighted some of the areas that we consider need further exploration. In particular, it raised for us questions around scalability, sustainability, interoperability, privacy, and security. In our second proof of concept, we explored some work on looking at new tools to anonymise and desensitise data. Much of the data that we as the bank collect rightly has restrictions on how it can be used or shared, even internally. Now that limits our ability to use that data. If we were able to desensitise that data to a sufficient standard that would allow us to share it more widely internally, keeping it secure, most importantly, without losing the analytical content, it could facilitate deeper insights from that data, helping us move our work forward. And the final proof of concept we did in that initial phase was around the risk that we see arising from the increasingly visible threat from malicious cyber actors. We've worked with a firm to see whether bulk public data could enable us to help form a view on an institution's cyber resilience. We've shared our lessons from the first and last of those proof of concepts on our website, so I'd very much encourage you to go and have a look. And we've just started another 3 proof of concepts in what we call our second cohort. In the first, we're examining machine learning tools to assist with research. We hope that will allow us to explore the benefits of machine learning and to gain additional insights into the trends using historic data patterns. We're also working with a firm that provides an analytical tool looking at enforcement and related actions. This will provide an intuitive tool to access the historic information, and we hope that over time, perhaps will enable us to provide some visibility, or perhaps will provide us with some visibility over how firms are responding to regulatory standards. And finally, the third one we agreed to do in this section was around threat intelligence tools, which we hope will lead to a faster sharing of threat intelligence information across a broader group, allowing firms to be more aware of risks in real time. And our work won't stop there. We're actively exploring how new financial technologies could support our policy and operational objectives. We think FinTech has the potential to offer us the ability to do things in a smarter, more efficient way. So as part of that, we've opened to applications for a third cohort where we're particularly interested in innovative tools that could assist us with data cleansing and protecting data at rest and in transit. But rather than just focusing on this future work, you could ask us, what have we learned from the work so far? How has it benefited us? And whilst we've seen some benefits, which are probably more specific to us as an organisation, we consider there are some benefits which have a much broader read across. So the approach for us, the Accelerator approach to engaging with FinTech firms, gives us access to skills and to a resource pool which isn't traditional to what we as a central bank do. But we feel it's valuable for us to engage and learn from that pool. So to make sure that we can carry on sharing the benefits from that work across the organisation, we're encouraging engagement from everybody in the organisation, from the grassroots up. The staff from across the bank work directly with the FinTech firms in each proof of concept. Now, what that does for us is it increases the number of staff with direct exposure and experience of working with these innovators. They access a different culture and a different way of approach. And it's allowed us to get hands-on experience for a broader set of people and to share the lessons across the bank. It gives the firms the chance to work with us directly in the bank on real-world policy and operational issues, and to get a reference client and to show that their solution can work. Our focus isn't just on how the technology might work, or on adding new tools to those which we use. We can all benefit from an openness to innovation and an increased engagement with new technology, using it as an enabler. So, for example, the team from technology who led our distributed ledger proof of concept work returned to their original home areas after coming together for the project and took the lessons from their experience with them. And by that, I don't just mean wearing skinny jeans to work. The new style of approach to trying ideas has taken root and spread across their areas. The team shared their experience on using new communication tools and approaches in their area, as well as the more detailed aspects of some of the things that they tried, such as automated QA testing techniques. And at the bank, we're particularly keen to encourage a working environment based on diversity of thought, background, experience, and skills. All of these can bring a new outlook to what we do. We see the work that we're undertaking with FinTech firms as part of that. We hope that by increasing our direct interaction with FinTech firms and startups, we'll get a different perspective, driving further innovation in the way that we approach our work. Technological innovation is not going away anytime soon. And another big benefit of the work that we're doing is the fact that it gives us insights into how this market is developing, shifting, and changing and growing. We're able to see how it's starting to develop and where the area of real interests are for some of the more established firms. We see that artificial intelligence and robotics are receiving increasing investment, with solutions that the market can deploy in the real short term and that can have a real impact. This can help us to prepare for how the market may develop and to target our engagement. The firms involved haven't always engaged with the central bank and the work that we do, and so it helps us to build further awareness of what we're up to and to grow our network. So in conclusion, I would say there's clearly a lot happening in the broader industry and within established firms as they face up to the new challenges that FinTech brings. Our approach has provided us with a window into that. The developments can offer us great challenges, but also fantastic opportunities. Being open to all that opportunity can provide huge benefits for organisations, their staff, and their consumers. However, we do think that the business and the innovators need to work hand in hand to find solutions that will really work and truly last. For true, lasting innovation that really benefits the organisation in the long term, it can't just be boxed off in a corner. It needs to be integrated into the work that you do as an organisation. So the model that we've chosen at the bank is to be open to FinTech and to innovation, to explore what it can offer to us as an organisation. It's early days, but we're confident that we're already seeing benefits from the engagement, both in terms of our learning experience with the technological tools themselves, but also the approach that engaging with these firms brings for us. And of course, we're always interested in the experience of others. For example, how you see the trends in the market and how you and your firms are engaging with FinTech and the developing market. It's a brave new world out there, and we'd like to understand your work, to understand how we can best approach it together. Thank you very much.